Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano, taking a look at quite a few different things that are upcoming in the near future, what's been going on in the background and what I kind of expect to happen next in terms of price action for ADA. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you have not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today? And if you're looking for a little bit more from the crypto space, why not check out the Patreon service as well? We cover things like bear market strategies, project reviews, and a bit of trading as well. Why not check that out in the description below? Okay, guys, let's get into this, right? So the first thing we really want to take a look at is going to be the price action of ADA, right? So here we can obviously see that we're in a bit of a move down. We have bottomed this out at about 40 cent, which is quite an interesting level. And I'm going to talk a little bit about some data that sits behind what's going on here from a price action of ADA, right? We can see here that we had a pretty good surge upwards. We can just mark this up as A, B, and C, for example, on this hourly chart. And of course, we're starting to pull back down. Now, if we actually think about this on a slightly bigger scale, if we jump up into the 4-hourly chart, for example, we could actually start to take a look at this as a giant A wave, this being a retracement, and then potentially pushing up higher. Now, we don't really have any good bounces here. We could obviously probably take a look at it from this perspective, moving down. If we were to do that, then it would give us an approximate target of about 47.85 before we start to see the reversal. So what I mean by this is that we have this large A wave coming on up here, this B wave coming down towards our 47.8, and then we surge on up. Now, if this is the case and we do actually pull back down into this low level, let me just quickly mark that right here and get rid of this one. We don't need that. And then I'll just put a little price label here so that we can keep track of this, right? It's 47.85, right? So then I can go ahead, just remove the fib there. Now what we'll do is if we are looking for a 1-to-1 ratio with our A wave and our C wave, these are pretty typical kind of moves, then this would put us tracking at about 72, yeah, right up here, 72.59. And that's also an important area because that is going to be an area that we also found that was previously support that was lost, right? So we're probably going to get rejected quite hard from this area, I would have thought. Also, this green line across here is a 382 Fibonacci retracement zone as well. So again, it wouldn't be too surprised if we actually resonate incredibly well there and pull on down. Now, that's kind of what's going on the smaller time frame. Essentially we are kind of talking about this kind of pullback coming in here, right? And it's quite a significant one. It's not a small kind of pullback that will come after this, right? So obviously pulling down to 40 cent is incredibly important. It's important for a couple of reasons as to what's been going on previously in and around that zone. The push up towards 72 could be pretty interesting. Of course, in order for that to happen, we would not want to go down lower than 40 cents. So we're just going to keep a good close eye on that. We want to make sure that that kind of thing happens really well. Now, if I zoom on out of this a little bit more, right, and we start to actually pull this in, and we can start to actually reflect on what else is going on here, right? So there's a bigger move coming down, and we can see that this has a potential to come down to about 30.12 cent, okay? And that being the kind of the lower range. If I actually pull this all into screen here, make the screen a little bit bigger so you guys can really see the macro, and you can see from the all-time high, this is a big A wave coming down, a little bit of a bounce here, nothing too major, and then this potentially coming down on a 1-to-1 ratio at 30 cent. Now this is very much hopium, I guess, for major discounts. If we were to run a price percentage drop from the upper side here, the all-time high, which I'll probably just actually have to try to eyeball this the best I can. Let me see if I can get it on the nose. I'm going to have to zoom in a little bit. Wait 1 second. Let me just go ahead and grab that. So if I grab that price on the all-time high right there we go. Perfect. And then I'll just zoom back out again. So as we kind of pull this in, and we can see that we can pull back all the way down to this 40 cent range right the way down here. And I'm going to have to zoom in on that as well. Let me just find the price point that I'm looking for here. There we go. Oh yeah, okay. So it's all the way down here. You can kind of see this one. Right there, that's that wick low. Okay, so if I zoom back out, you can see this is an 87% drop, right? So 87% from the all-time high to that 40 cent low range. Again, taking this down to 30 cent puts it into the 90% range, and as if we pull on down much lower, we are talking about dropping down 95% or so of the value. Now, some of this is going to be possible, some of it is not going to be possible. The previous major resistance and support levels are down here at 15 cent. So going down and there would be 95% retracement. Now, 95% is incredibly important for crypto. For those who are unfamiliar, maybe thinking that we're going down lower, essentially 95% has historically been a really good point where the altcoins have bled as a maximum kind of retracement zones, right? Very few have actually gone down lower than 95%. There are some exceptions, obviously, there's always exceptions to the rules, but for the majority, 95% has been kind of the maximum bleeding potential, and then they kind of bounce up and go up massively. And so there's always the possibility here of actually coming back down to this low area. Okay, this is basically the area of July 2020. After basically starting from the lows of March 2020, right? Really moving up. So that's like our wave one high. So when we're talking about pulling back, you know, this is the area that we really don't think is likely to kind of go down any lower. We're taking a look at the kind of Fibonacci levels here. The 1-to-1 ratio is 30 cent. A 1.236 wouldn't be uncommon either at 21 cent. And the 1.382 at 17.8. But going down into these lower ranges is very, very unlikely once we kind of talk about dropping past that 1.382 in my opinion. So just want to highlight that there. I think dollar cost averaging ADA, all of these prices, it makes actual sense. So we want to really focus in on that, because essentially it is where the maximum amount of value is going to be seen, right? It's where we're going to be looking for that kind of maximum upside. Now, anything lower than 80% from all-time high, if you're a retail investor, dollar cost averaging just kind of makes sense. But let's actually take a look at a few additional things that are happening or coming up right in the very near future, right? So we have the 𝗕𝗪𝗀𝗃 hard fork, right? And what's really interesting about this is it's going to be introducing a few quite key things. And these are really important. It's going to be coming at the end of June. And there's a few things about this data that's absolutely vital in understanding, you know, where we're going next, right? So I'm just kind of recap a couple of things on here. Then I'm going to go into a little bit more detail, right? So here there's basically the features that are going to be included in this update is basically CIP31, 32, and 33. Okay, these are basically going to be helping things with scripts and throughput in general. Right now we're going to go into a bit more detail on that. We can actually take a look just on here, right? So we'll start with CIP31. Basically this allows dApps to access transactional output without the necessity to spend or recreate those transactions. This will basically solve that hypothetical or that issue that I guess a lot of developers were facing early on, which was one block or one transaction per block. Now that wasn't actually technically true. You can have more than one transaction per block, but you have to approach things differently. This particular CIP31 actually kind of bridges that gap of knowledge and actually helps people create more simply more transactions per block, which is going to be absolutely vital in kind of pushing things further forward. Now CIP32, this basically allows Cardano users to store data on chain seamlessly, right? And it sounds like you should be able to do that anyway, but it's a little bit clunky. But I think this actual update is going to make it a lot more efficient and more seamless, as they say here, right? Which basically in turn will advance the decentralization and adoption of the blockchain. So we've seen a dramatic, adoption level for Cardano, and it's not going to slow down after this update. Okay, so really wanted to kind of really focus in on that. Now CIP33, this one is basically all about your smart contracts and is a very important one. So for those who were familiar, back in September of 2021, smart contracts launched on the ecosystem, but those smart contracts they weren't as easy or as user-friendly as maybe people were expecting them to be straight out of the box. Instead, you needed to have the Plutus application backend to basically standardize some standard practices within the Cardano ecosystem. Instead, you had to kind of write those smart contracts a lot more manually than than you were kind of looking at it previously. So this CIP33 actually reconsiders the logics of how Plutus scripts, which is basically compiled Haskell programs, are submitted to the blockchain. It will reduce the usage data and increase the net throughput of Cardano. So really, really important that we kind of really think about that, cover that, and understand exactly what that means. But basically, if you're familiar with Cardano at the moment, there's a lot of throughput-based issues. Obviously, NFTs are going crazy on Cardano's ecosystem, and the throughput on those NFTs is being quite, or those NFTs are hindering, I guess, the throughput of Cardano's ecosystem. So you kind of see there's a little bit of more delay going on with Cardano. This CIP33 will help with that throughput and help increase things, along with other things that are being implemented as well. So as we go on to the last one here, the CIP40 upgrade, this is designed to advance the DDoS protection of the Cardano ecosystem and protect users from losing their ADA collateral. Okay, now this particular hard fork is scheduled for June 29. Okay, so we're about a month or so out, like probably 6 weeks, I would have thought, to kind of seeing this one actually happen. And obviously there's going to be a lot of things that kind of come from the back of this that are going to be absolutely massive for Cardano. And obviously, you know, what's going on, if we think about what happened back in 2021 in September, the lead up to smart contracts, this is no exception either. There are a significant number of whales that are basically driving some significant volume on the Cardano ecosystem. Okay, so whale transactions hit a 4-month high as large players are buying the dip. As I said, 40 cents was important, right? As we hit this low point on the charts here for Cardano, this 40-cent low, this actually triggered some very, very significant buys from some really big players in the space. So as we come down here, you know, basically there's been a rapid slide of Bitcoin. They kind of talk about all that kind of stuff. But basically, you know, we've actually seen a significant amount of information of basically data of volume pushing through the Cardano ecosystem as we hit that low of 40 cent. And here you can kind of see the significant spike just on the ADA, right? And basically this shows that there was basically over 1,000 transactions exceeding $100,000 in value. So the largest spike since January, right? So very, very significant volumes have been pushing through on the Cardano. The whales have definitely been buying the dip. So when we start to think about, you know, where things are going, I think it's very, very unlikely that we are likely to see significant drops below 30 cent. I think 30 cent is going to probably be the lowest point I could see Cardano going down to. But I do have an open mind about the 1.236 and the 1.382 being basically 21.5 and 17.4 retrospectively. I think those are important points that we should really be focusing on. But essentially, I'm not expecting significant kind of withdrawals or significant crash in the ADA price on the shorter time frame. I think actually, if we think about the larger time frame, you know, if we jump up into the daily chart, for example, this correction coming down here is very, very large, but it wouldn't necessarily mean that the end of Cardano, and I would expect a pretty significant reversal and a big push to the upside as we kind of come out of the other side of this move down. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you'll be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.